Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, China has posted a current account deficit, the first in a long time. But first, the American non-farm payrolls report data was a very mixed set of results. The headline jobless rate dipped to a very low 3.9%. That is the lowest rate in more than 17 years. But the number of new jobs created came in far lower than expected at 164,000. Although that was higher than March's 135,000. What is troubling is that their participation rate was unchanged at a low 62.8. Average weekly earnings rose 2.9%. Wall Street shrugged off the weakness and rose nearly 1.5% at the weekly close. That was essentially driven by an outsized earnings result from Apple. This is in contrast to the Asian and Australian markets, which ended the week in the red. Warren Buffett's Berkshire Hathaway has posted a giant quarterly loss to March 2018 on a mark-to-market valuations of his long-term holdings, something he warned would happen with the adoption of short-term accounting rules inappropriate for long-term investments. In Beijing, senior American officials have wrapped up talks with the Chinese over trade issues that seem to have made little progress. Each side is dug in, demanding large concessions from the other, according to unofficial leaks. This comes as China posted its first current account deficit in 17 years. It was a quarterly deficit of $28.2 billion. The last one they had was in 2001. Some analysts are saying this signals a long-term shift where current account deficits become the norm for China. And Argentina has surprised markets again, with another sharp rise in official interest rates over the weekend. This time they hiked them another 6.25% to 40%. That is a third rise in a week, taking the adjustment up from 27.25%. Inflation is high at 25%, but their currency was being hammered, exacerbating the inflation. This latest move returned some confidence in the struggling peso, and it was accompanied by some serious fiscal restraint, the first sign runaway government spending is being capped. And Greece's largest banks will receive a clean bill of health from the ECB this week, an important step towards completion of an 8-year bailout program that has strained the country's economy. And the US Treasury yield, 10-year yield, is at 2.95%. That's up 1 basis point from Friday morning, although about the same level it was a week ago. The Chinese 10-year is up to 3.66%, while the New Zealand equivalent is at 2.91%. Gold is at $1,314 an ounce in New York. Updated data from the World Gold Council shows weak demand in the first quarter of 2018, with demand weak across the board, and supply also slipping, but not as fast. In fact, in the year to March, supply exceeded demand by its largest amount in 15 years. The overhang is killing any upside. All risks are to the downside. Oil prices have jumped more than $1.50 in US dollars to just over $69.50, and now the Brent benchmark is just under $75 a barrel. Rising prices have seen a jump in the number of oil rigs in operation, especially in the US. And American Iran tensions are behind the rise, but a shift in Saudi policy may also be helping. And the Kiwi dollar ended last week down at 70.2 US cents, another half-cent retreat over the week. On the cross rates, we're at 93.1 Aussie cents and 58.7 Euro cents. That puts the TWI at 72.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.